Happy Sunday. Let's look at some long-term analysis.
Let me into my zone. Let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Welcome back to Krown's Crypto Cave. People of camera number 2 once again waking up for a little bit of an earlier morning over here on a very bright and sunny Helsinki, Finland Sunday, I guess it is. Hey, where's my charts? Come on, can you please work? There we go. I don't know what's going on with my computer right now. Who knows what's going to happen next, but at least it's working right now. So all good. We have plenty to talk about today because it is Sunday. It's a long-term analysis day, and realistically, very little's changed in the lower-term timeframes from yesterday to today. In fact, pretty much everything that we spoke about yesterday is still very much relevant on the lower-term timeframes as we did fill out the range once again, which is a nice opportunity. It's a $200 range or a $300 range, so that is very much tradable, especially on about a $7,000 number. That's a little bit less than 5%. Very, 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 very nice and generous of Bitcoin to give us on a very lackluster otherwise weekend. Anyways, I want to talk about long-term analysis today because it is a Sunday, of course. And before we get into that, I want to say a massive thank you for everyone who came out on yesterday's Twitch stream. That was fucking amazing. 8 hours again. It was not planned like that, but it just, when you're having too much fun, talking shit, looking at a little bit of price action here and there, doing some trading here and there as well, it goes by damn fast. So I'm glad to be spending that time with you. And that's really kind of what trading is to me, is waiting around for waiting around for my edge to give me a signal, and until it actually gives me that signal, well, there's not much to do except for talk a little bit of shit and have some good conversations going on, of which we had actually plenty. Very, very chilled out vibe, and we'll be doing it again today. If you want to join on in, the link is in the description below. If not, all good. I understand it's not for everyone, and that's all well and good. Anyways, let's put the focus now on the Krown trading application. It can be found at app.krowntrading.net. It's free and it's there for you to use. It was made with love by our very trusty and highly esteemed developers who are amazing, and more importantly, this was an app that I really wanted to make for myself, and due to a pretty pressing concern and need, as we found that a lot of the data being spouted out by a lot of these data mining websites are actually not very efficacious and not very legitimate. So we had to do it ourselves, and then we can actually trust it. So it's there for you to use. We made it free for everyone, and costs a lot of manpower hours and all that good stuff. But I'm very, very happy with how it's turning out right now, and more updates to come, of which the next update will have the open interest chart, which I am very much looking forward to. But until then, actually have to hold off on making that new bonus module for the TA program for it. But once we get that, I'll be able to make it, and then fun times ahead. Anyways, with regards to all of this, we do see that open interest has come down quite significantly for a weekend, to be fair. It's all relative, right? From about 635 million that we saw yesterday on the Twitch stream, all the way down a little bit, one tick below 600 million, as you can see right there, while price action essentially rejects from the $7,000 range again. So what is that going to tie into the analysis on the lower term timeframes? People taking profits at about $7,000 from the trades that were put on in the 600 range, it looks like. So that's going to really tie into the lower term time frame analysis. We have a few things to update there, I suppose, but more or less the focus can be on the higher term time frames, which the open interest right now is still playing in with the greater bounds of our longer distributive pattern, is what it looks like. Anyways, with all of that said, I think it's time for me to wish you the best of the best and the happiest of the happiest. I haven't done that in a long time. Holy shit, man. Sorry about that. I've been saving it for the end, but the end is your friend. And I don't even know if that's a real saying, but you know what? Let's get into the actual analysis right now. Look at some good old price action, and what do we see right on over here? Once again, starting off with the 2-day, and I think that the 2-day really reveals all. I'm trying to decide in my head, should we start off with the higher term timeframes or the lower? Let's start off with the lower. Let's start off with the lower for now. Let's go back to our GDAX chart, and of course, putting on all of our drawing tools. What do we see? The blue box is a peace and prosperity strike once again. Nothing's been moved here for the last, I don't know, fucking week or so, and a couple spikes up into the $7,000 range, rejected. Couple spikes down into the 6,650 range, rejected once as well. And playing the range has been really the thing to do for the options traders out there. You must be absolutely elated to be playing this range right now, as it makes those weekends pass by a lot faster, especially when you have those daily expiration options on Deribit. Very, 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 very generous, I'm sure, too, as the premiums on those are pretty fucking nice, especially considering that, well, we're really just living in about a $300 range. Anyways, as far as the lower term timeframes go, like I said, nothing's really changed here. Just a couple more tests to the top side, a couple more tests to the bottom side, and can still run with the former assumptions that we had from yesterday. So if you want a little bit more of an in-depth explanation, go to yesterday's video. It's going to be more dedicated on the lower term timeframes, but as it stands right now, we are still living in the context of this rising channel. Some might call it a bear flag. I think it's a little bit too extended to be a bear flag, but the sort of interpretation of it is the same. It's a redistribution pattern as long as we're living in the bounds of this rising trend line right here and this rising trend line right here. Our support trend line for this formation coming in right around, actually going to move up a little bit today as it's going to be right around about 6,500 actually. So the top side of this blue box now will act as the actionable portion of that. And as long as we are closing, we could see like 2 hour at the very least, 4 hour at probably preferred for a faster initiation. As long as we're closing 4 hour dildos above 6,500, no real breakdown is to be had. But the second that we start to close 4 hour dildos, especially below the bottom portion of this blue box territory, right around about $100 lower than that, 6,400-ish region, we could call. I wouldn't declare it like officially broken. And technically speaking, once it does get officially broken, assuming that it actually does, not always going to work out like that. I've certainly seen many patterns break the opposite way that they're intended to. It's all game statistics at the end of the day, but it would suggest that we do have a measure move all the way back down, essentially to our prior lows. Now, as this will actually raise up a little bit, somewhere right around about 4,500-ish region. Now, where do we get a wild wick? Nobody knows. In fact, I would still say that 4,200 is probably still the ultimate target for that, if that does indeed happen. But for right now, I think it's a little bit more, it's time to be a little more conservative just because, well, Bitcoin's very far away from even confirming this next move to the downside anyways. And of course, there likely would be, not likely, there extremely likely would be bounces along the way on the lower term timeframes. I have one plotted out right here at about 6,000, nice, or 5,900 we could call it, nice psychological number as well. Then around 5,500-ish region, that's also going to be the 200 simple on the weekly, and that's going to tie into our higher term timeframe analysis, then 5,100, then 4,800, and then all the way down to the dooms drop, which would be quite nice. By the same token, could Bitcoin reverse back up to the upside right here? Yes, absolutely it could. We've all seen weirder things happen in Bitcoin land, but as long as we're living below this blue box right here, I don't see any major threat of even a short-term move to the upside. Now, even in this range, there's still, $300 edge if you are trading range to range. So, that's not to say to like the very low term time frame traders that there's not anything there. There certainly is, but I wouldn't really be looking for the next leap up into the mid to higher 7,000s until we actually get a 4 hour total closing at the very least above 7,000. And realistically, that actually probably wouldn't do it for me. I'd want to see it close above the top side of this blue box, a little bit higher than that, about 70.50, and more conservatively speaking, I think that would be the better way of going about this. Anyways, while we are here on the lower term time frame, see what our oscillators are doing. Oh, and by the way, I have the coolest new Bali infused indicator and pig indicator to share with you relatively soon. Actually, we'll look at it in just a second here. But we have a couple of competing narratives right here. It's still a tale of two trend lines on the lower term time frames. They're still very much relevant from what we see in the last couple of days. This guy right here governing our highs, getting the last 4 highs pretty damn well. This one right here governing our lows, getting the last 3 lows pretty damn well. And once again, we do see that 4 hour Stokes do want to curl back up, rejecting the bearish control zone. I do like that, at least for some short term, maybe another test up to the top side of the blue box around, high 69s, low 7,000s, something like that would be about right. It would align with that. And let's just see if that's mediated along amongst our other lower term timeframes. We want to see, agreement between these timeframes, and that should help formulate a nice bias. The 3 hour is up, but a little bit weak. The 2 hour is down and strong, and the hourly is curling back down and strong as well, actually even breaking this trend line along the way. So we do see a disagreement between all of these, which tells me that we're going to probably float aimlessly here sideways, test a little bit of downside, test a little bit of upside, and then probably once CME is open later tonight at, I believe it is 6 or 5 p.m. Central Standard Time, we should probably, that's when the game begins, and then especially leading up into tomorrow's open of traditional markets. New York Stock Exchange open 9:30 a.m. Eastern time, of course. So with all of that in mind, I do think that right now it's going to be a game. It's going to be more or less the same shit as yesterday, more or less boring ranging activity as we spoke about yesterday, and then fun to likely resume this coming week. That's essentially what I see for the lower term timeframes. Now let's go check out this new Bali infused indicator, and this is what I mean by Bali is just he's a fucking genius. He's absolutely brilliant. He has taken my stochastic indicator with my inputs and then reversed them, and then found out and done the calculations for exactly where crosses will happen at what price point. This is so fucking useful. This is so fucking useful. I absolutely love it. Where's my labels at? Yeah, there's the label. So as you can see right here, this is not available for public use, by the way, before I get a million messages about this. At some point, perhaps will, but not right now, and we have no time frame for it, at least as I know. But as it stands right now, we do see in this reveals, and this actually helps formulate a deeper bias, especially on the especially on our lower term timeframes, because we did see a disagreement on our momentum oscillators right there, especially well, I mean, not only that, but RSI kind of floating aimlessly in the neutral zone, so that doesn't really help. But this is the time where I use Stokes, especially when we have range behavior. That's the perfect time, at least in my opinion. And what do you see right here? This actually shows us at which price point it would have to get to on this next closure for a reversal of the Stoke cross, essentially, with my settings. And as you can see right here on the 4 hour, it's actually 67.33. We're not all that far away from that price point right now. So this proverbial cross the upside, as you see it right here, is quite weak. And I think that this is going to be even further mediated by the 3 hour, as it should show. And then the 2 hour and the hourly are probably going to take over. That would be my reading of this. Looking at the 3 hour right here, we do see it would actually have to come all the way back down to 6,700. So that would be the low side of a range, essentially. So, still going blue box to blue box is probably is in my opinion the best way. But this also further confirms this, and I really like the inherent agreement between these. Just for example's sake, we do see the blue box to the downside coming in right around where 6,650 to 6,700. So if we did start to close 3 hour dildos below there, well, I would also look for momentum oscillators to turn back down, and if they're turning back down around the bottom side of the range, caught in the bearish control zone, that's typically when you actually do see your breaks. And if we do break this area right here, I would look for an official test, not all that much interestingly lower, just to this next blue box right here between about 64 and 65. This is very low time frame bullshit. I'm sure this is the point where, oh, so you're saying, Krown, that if we lose 6,700, we're gonna go to 6,400? You fucking suck. It's like, okay, we're traders here. So I don't really care about the moonshot or the doom shot. I care about these nice ranging moves are actually very, 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 very tradable, and you can certainly make a living trading just this. I mean, it's quite simple. It's quite I think it's probably one of the more easy things or the easier skills in trading to acquire relatively fast. And when you have a $300 range, potentially $300 on the table, and you're leveraging that, or even just playing it spot and doing it with bigger numbers, that can add up very, very quickly, especially when you realize that you get several of these tests even in the same fucking day. I mean, even just yesterday we had 1, 2, 3, so it's 3 times. That's 3 times. I mean, Jesus Christ, man, that adds up really, really fast. So yeah. By the same token, to the upside's a little bit more difficult. Sorry, let me get rid of this right now. If we did close back above, let's be more conservative here, just because it is kind of a bigger piece of price action. If we did close back above, let's call it like 7,100, even though I do think you could accurately make the call somewhere around like 7,050, even 7,000 probably does it as well, although I'd be a little bit careful there. I would look for a move actually all the way up to test this blue box over here. There ain't really too much in the way. And then also that would be the top side, as you can see, of this rising channel trend line. So still very much relevant. Also meeting up with the order block coming in from this major area before the big breakdown in early March. So all this adds up very, 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 very nicely with each other, and I really do like that. In fact, if we took everything off and put on the volume profile, I'd imagine we're going to see some interest right around there. Yes, indeed. You can see that with the point of control obviously gathering most of the price action as it is right now, and we are kind of living above it as it stands. However, until you pull it back a little bit further, which I think that you actually really need this area right here, to be fair, because this is our last kind of reaccumulation zone after that big drop from 14,000 to 6,500. Well, we do realize that we're actually living much below the point of control, and the point of control is actually showing major resistance exactly where it should, right around our last accumulation zone. So as long as we're getting rejected before that area, it's overall bearish. And in fact, we can come up with many ways for that. So again, to delineate and differentiate between the lower term timeframes, the medium timeframes, and the high and the macro timeframes, which I feel like is perhaps maybe I don't do the best job of differentiating them, but it seems to be where I'm misheard the most. Lower term timeframes, they can float around from being bullish to bearish a million times in a day, and I flip flop my mind a million times a day on that one as well. But the medium and higher term timeframes do not change anytime soon, and the medium timeframes will not change as long as we're closing at least daily dildos below, let's call it 72 to 7300ish region. The higher term timeframes, actually no, sorry, I need to flip that around. That's the higher term timeframes. I'm talking about daily, 2-day and above. In the medium term timeframes flip around actually back above about 7,900 to 8,000ish region. It needs to get back above that hump and actually construct an uptrend on a time frame that actually fucking matters. So with regards to that, got a lot of work to do. And my medium and higher term time frame bias has not changed. My bias bone are very, very strong, and it is still to the downside. I do not believe that Bitcoin has really actually seen the lows just yet. This can take a very long time. This can take months, can take, quarters, really. I mean, people have a very interesting way of interpreting price action as just like the last day or so of price action. This bounce thus far off the lows is incredibly weak in my opinion. Long term, the volume is absolutely falling off the cliff. Volatility has contracted to a fucking standstill. This is a 4-hour chart, by the way, and let me remind you what happens when we get back into the single digits for historical volatility percentile on the 4-hour. This has precipitated all $1,000 moves plus in the past. Anytime that we get down to the single digits, I mean, of which early February probably rings a bell. Back on over here before this nice move to the it was actually a nice move to the upside, as you can see. $1,000 move from about 95 to 10.5. Time before that, we have this accumulation phase right here, leading up before, I mean, realistically like a $4,000 rally, but a very fast and quick move from this low to this next high. $1,000 up from 69 to 79, 8,000 essentially. Time before that, this $3,000 rally right here, getting very, very low and then spiking it up once again. And plenty of examples back in the history, in the annals of the Bitcoin, and I will just let that stay there for itself. So with that said, the volume signature confirms this, in my opinion, as a rising channel. Again, this guy right here, and it also says that we are quite mature within this formation as well. Let's actually zero down in on this. Let's get rid of these guys and maybe go to, well, we can keep it on this chart. But as you can see right here, very nice orderly drop off in volume going from left to right. And we are getting damn near an apex. Apex coming in around 12th, 13th of April. That would be, I think, late this coming week or maybe early next week, whatever it is. But more importantly, we typically break, or it becomes extremely likely to break when it's about 75% full, of which I would say that we're about that area right now. And with historical volatility percentile also being incredibly low, this is the, these are the two ways that I can, if I had to time something, that's what I'd use. I don't really trust too much in timing indicators, but volatility is not a timing indicator. It's like a probability indicator, more or less. Just saying we're kind of on an outlier level of how low volatility that we have right now. So it's just likely to expand. It's a mean reverting indicator, and that's one thing that you can trust on, is the maths on that. Anyways, okay, cool. So with all that said, I do think that we're going to see a big move probably this next week, outside of this channel. So either breaking below, let's call it 6,000 again, or back up to 8,000. I actually do think that that's probably relatively likely to happen. All right, so now that we've discussed all the lower term timeframes, we're already 17 minutes in? Are you fucking kidding me? All right, let's talk about higher term timeframes now, I guess. Let's go over, let's go over to the 2-day. I think the big focus here is on the 2-day, as I do want to cover up what we've been speaking about for quite some time now. We do see the 2-day dildo death cross. The moving averages continue to gain more divergence away from each other. We are going to be ending this 2-day dildo that we're working on right now tonight at 8 p.m. Eastern Time. If it ends anything like this, as a rejection of the 21, this is going to be 2 shooting star dildos in a row, which typically is good enough for reversal. Not only that, but we also will be working on some pretty hefty hidden bearish divergence, assuming that this confirms as a high. How do we confirm this as a high? Well, I'd want to see at the very least the last low taken out from this shooting star dildo, which is 65.70. Funny how that kind of lines up pretty damn well with our 6,500 breakdown for this range, and that would likely indicate continuation of the downside. It'd be a little bit premature, to be fair, but if you don't want to wait for the closure, then I think that would be a perfectly fine way of doing it as well. Not only that, we're going to see 2-day dildo Stokes actually get into the neutral zone, and I do think that they are starting to weaken. And in fact, if we put on the reverse Stoke cross, what price would they have to go back down to cross the downside? Actually, quite a bit, $6,000 region. So it's not happening anytime soon. But the more and more hesitation here, the more and more that price will rise up, and the more, or the price point of that inflection point will rise up. And you can imagine it also comes at a nice inflection point, basically our last kind of local low right here. So, Bitcoin turns around macro bearish, like for an immediate trade, trending once again, once we take out this low at about 6,200-ish region, especially on a 2-day closing basis. And let's go look at the daily as well. Or sorry, before we get to the daily, let's stay on the 2 days. So we do have potential hidden bearish evidence in play, especially if this confirms as a local high. It has not confirmed as a local high just yet, and like I said, it won't confirm at least until we take out the low of this guy at about 65.50-ish region, we'll call it. It is closing tonight, so if it does close anything like this as a shooting star, I would say that my bias bone are going to be certainly to the downside as the 2-day death cross moving averages start to gain more and more divergence away from each other, telling us that the bots and algos are on the same side of that cross and increasing the sell pressure on it, while the 21 exponential moving average producing our last little bits of rejection while crossing the 377 all at the same time. This is all very important because the last couple times that we have an example of this in Bitcoin's history, we're back on it works for the upside over here. So we have a great example over here going all the way from 7,000 to 14,000. Great move, but the death crosses are of particular interest because that's what we're looking at right now. And we have the same example back on over here in September 2018. Bitcoin gets a death cross, then slowly but surely gets ground down below the 21. The 21 crosses the 377, and then boom, dooms drop all the way from 6,000 to 3,000, essentially about a 51.5% move to the downside, of course. I also want to say that it is of interest here. It is of interest here that the 2-day does test the 55 on this example right here. This was the Tether debacle, if you remember that. And funnily enough, on the other example that we have that we're about to look at, not the golden cross right here, again, another great example to the upside, but the last example before that to the downside. What do we have? What do we see? We actually see the 2-day little death cross, price action very far away from the cross. We get below the 21, but the 21 does not cross to the downside of the 377, so it's not immediately pressure to the downside. And what do you know? Another test up actually to the 55. In fact, this one even gets a wick up to the 200. But what we can standardize for is obviously a obviously a move to the 55. Now this is two times. Two times to not make a trend, but we are working on a third time right now. So I would say that the second that this really starts to confirm as a local high is the second that I really start to angle my cannons back on that same side. Anyways, once the 21 crosses the 377 and we have the death cross, nice and mature over there, we can take the last high to the next low. And what do you know? On a closing basis, we got 52.25%. How beautiful does that work? Nobody fucking knows. Anyways, all right, cool. Alrighty. Okay, already. Let's go back on over to our current times, and what do you know? Very, 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 very similar price action. But could we get a test of the 55? Yes, I do think so. And where is that area? That's all the way at 7,800. Why is 7,800 important? Well, remember 7,800 is a top side of our flag formation right here. So if Bitcoin did get up there into that blue box territory, we'd be testing that area. It would be a nice washout for the over leveraged shorts. And I also think that it wouldn't really change around any of the of the biases just yet until we get closures above there, above the blue box specifically, I should say, which is about 8,000 even now. Nice psychological number. And it'll probably get a lot of people bullish once again. So with regards to that, I do think that there's still a threat of an upside move here, but I wouldn't really. I'm not looking at this price action right here. It looks a lot more heavy to me. And looking at open interest, volume, and volatility, coming down after that move to the upside, it does look to me like it's losing momentum sooner rather than later. But hey, if we had another move back above 71 or 7050, 7100ish region, I do think that is very possible that we could get extension all the way up to even 78, 7900ish region, and I'd still kind of remain cautious within that region until we're really closing above 8,000 on a shorter term time frame. Higher term time frames like a weekly above 7,500 would do it for me. But a weekly closure above there is not the same thing as like a 4-hour closure, right? So it's going to take its time, and a lot of patience is going to be have to had in this region. Remember that markets really, they take their time, and we don't really see anything indicative of a bottom here just yet. I'm sure people are going to disagree with that. The only thing that I think is indicative of a bottom is just like the volatility read on that, but that happens on major inflection points regardless. You can expect that sort of a read, even if it's like this area right here. This is obviously not the bottom, but it's a major low. This one obviously a major low as well. We've had a phenomenal rally. All the way up from 4,000 essentially to 7,000. It's like nearly a 2x. Pretty damn good. But we do not see bullish divergence on the low. And on every low in Bitcoin's history, every macro cycle low that we've seen in Bitcoin's history, there has been bullish divergence, at least 2 drives, usually 3, and in some cases even 4, like this one over here. Even the major lows, not even a macro low, but a major low like this has 2 drives. Boom, $4,000 move up. 3 drives right here, $3,000 move up. 4 drives right here. This is the last macro cycle low. Several examples in 2018, right here, and actually, do we have one right here? Yeah, actually we do. Actually, it does work out right there too. So all these failed rallies, even in 2018, which were very impressive rallies, did have bullish divergence. And then going back to 2014, of course, the last market cycle low as well. Or I guess I'm not on that chart right now, but yeah, done it enough times now, so you probably already know. Anyways, currently, do we have any bullish divergence coming off the low? Absolutely not. Not in any way, shape, or form. In fact, the only divergence that we have potentially working on here is, actually, we don't have any divergence on the daily, so fair enough. In fact, the daily is probably the best thing for the bulls right now. Just as long as we're above the 21, it is more difficult to be more immediately bearish. But let's take a step back and look at CMEs. How did they close on Friday? Because they're pretty indicative of how we're going to close the weekly. And CMEs closed at about 67.15. It looks like closing price. Yes, it shows 6,800, but 67.15 looks like the real closing price. And more importantly, we have a very a potential case of hidden bearish divergence here as well between this point and this point, which correlates with this point and this point over here. Yes, we are closing on lower highs, it looks like. And more importantly, we are rejecting the 21 exponential moving average. And I would go further than that to say that just the range of our last doji doodle right here probably gets things as well. And what do you fucking know? It's 66.25 low to 7,100 high. That's pretty much exactly our blue boxes on a closing basis for Bitcoin as it is right now. Now, there is a little bit of a premium on spot price action with regards to CMEs. So, those numbers are going to be a little bit lower for spot, but it does line up with those levels that we, laid out earlier, which I do really, really like. Let's also look at momentum oscillators here. We do see that daily Stokes are getting way up, testing around the bullish control zone, but let's see what the reverse Stoke cross shows. If we come back down below 62.50, just the last local low right here, well, that'd be a damn good indication that this price action is getting ready for a big bad down, and it's going to be back below 5,000 or back below 6,000, deep into the 5,000s, I'd imagine, soon if that does happen. So I do like how these things are lining up. And now let's go look at our weekly and whatnot. And then, or actually, we should look at probabilities first. Should we look at probabilities first? Should we do that first? Now let's look at this first. We're already on it. Weekly 21 exponential moving average crossing the downside of the 55. Nasty, bad, not good. Crossing the upside over here. Great, awesome, amazing, glory. Crossing to the downside right over here. Bad. Crossing to the downside. Do we have another example right here? Yes, indeed we do. Same areas. These are like 50% moves. We've already done the math on, or we've already done the measurements on it. Let's just go back down and see what shaving off 50% off a price action right here would make it look like. That would put us all the way back down around about 3,300, which is very interesting because if we go over here to CMEs, no one wants to talk about the gap at 3,300. What is this? Is that a gap? Well, actually, that's not a gap, but this is right here, and that's actually about 3,500. So with a premium, probably gets around there. And again, it doesn't need to be exactly 50%, but it gets in the region. So we do have historical markers that do kind of line up with that region, and I do think that is still relevant. Not only that, but the Bitcoin VWAP ratio. We've been watching this intently for the last few months. I don't talk about it every day because it doesn't change every day, but we are once again in danger of getting the signature that has precipitated all 50% drops or more. The signature that happens when we get the medium volume weighted average price going below the least reactive, led by the most reactive, all below the zero read right here, which is kind of like just a nice regression of generally bullish, generally bearish for below it or above it. I won't go through the full explanation on this because I think I've done enough already. And more importantly, all I need to see is that pink go below the zero marker right here. We already have the purple below, and the blue is looks like it's leading. And that has been all prior major signals to the downside. One example right here in what is this, July, August region of 2019. Sounds familiar. Before that dropped from about 10,000 to 6,000, right? Then we have this guy right in over here. The bull trap of 2018 from, I think this was the $8,000 read all the way down to $6,000, almost 50% drop right there. This read right here on the January 2018 drop, and we can correlate this with the price action, but you probably already know, 20,000 to 6,000, so a pretty damn big one right there. Another bull trap in 2014 read right here, same signature, going all the way from, well, this bull trap down to the next low, I suppose you could say. This one right here, correlating with the parabolic high right here, going to next major low. That was a 70% drop. It doesn't look like much, but it was. Same thing right here, same thing. And we can go back in the price section and just briefly confirm this, because I've done this so many times that I actually know by heart exactly where these price points are. So we had an example right here, of course. This one getting about it depends where you kind of measure it from, but last high to next low would be about 43%. If we go wick to wick, it's probably going to be like 50%. Or if you go all the way from here to the actual low on that, because we actually do kind of reverse for a little bit of time, then it's going to be 50 on the dot. Time before that was this bull trap right here, of course, and this bull trap over here, going all the way from 8 to 6, I believe it was, or sorry, was it this guy right here? No, it was in July, August. Yes, so it was this one right here, about a 32% move, so pretty damn good. We got this guy right in over here from 20,000 down to 6. That's going to be a pretty damn big one, about almost 70% or 69 if you want to be exact. Then we have the bull trap of 2014 going back on all the way on over here. Depends where you really measure them from, but going from last high to next major low would be this 50%. Going from last high to next macro low was 76%, and going back on all the way on over here, we had this one right here. Going from last high to next low before the big bounce, about 65%. Then we had an example right here, and you probably already know it's probably going to be somewhere in the same range as all the other ones. But if we do it out, about 69%, great number. And there's one before that that's about 90%, but we're just going to pretend that one didn't happen. Anyways, because we do have a potential another signal like that in the making, let's just play around with numbers once again. What happens if we shave off 30% from this price action? That brings us back down to the mid 4,000s. What happens if we shave off 50%? We already know it brings us down to our last macro low at about 3,100 or 3,300 if you want to be exact. What happens if we take this all the way down to like the outlier stage of this at around 69%? Well, that actually put us down around 2,200, and you do see a lot of people calling for 2,200, and I do believe that is in the cards, but I wouldn't get super bearish, like bear-tard just yet, because fucking traders here, not goddamn analysts, and I need to see like a weekly close below our last local low. So I do think that there's several places of potential bounce behavior. I do think that low 4,000s is a pretty damn good one, especially on the weekly. That would be essentially where Bitcoin did break out from the last bear market, and also going to be accurately getting around the 377, which we did put a nice spike in as well. So I do like that. You can kind of just visualize a nice blue box in the bottom right here. In fact, I already got it, or I don't have a blue box there, but I do have the relevant trend lines for that. We can draw it in right now. I would actually really like that. It's also going to be the 942 Fibonacci retracement. If you're looking at a Fibonacci retracement from the ultimate high to the ultimate low as it stands. So I do like that area as well from a Fib perspective. I'll see 886 coming in right around 5,100, which I do like for a bounce area as well. And actually this is playing off the Fib very nicely. In fact, we're hitting the 886 right here, and so far not living above it as it stands. So here's the thing. If bulls want some hopium long term, this is what I'd say. It's that we're working on, put it on log scale first, because that's what all bulls need. Although I don't think that it's that relevant anymore. And then look at this as one massive triangle with an apex coming in February 2021, and probably going to break out somewhere like around June, July of this area. Could be both to the upside or the downside, as a symmetrical triangle is an equal opportunity formation, but well, we'll just have to wait and see. The inflection points are actually meeting up with fibs extremely well. 786 right here, 786 right here, right around about 650, and that's on a weekly close. But again, needs to be at the downside, and it's probably like a few months away. And then 618 to the upside around 9,500, and it will low over time. So yeah, I do like the symmetry within this market right now. Anyways, 33 minutes in. All right, let's see what else we can do. Let's go back down to lower term timeframes and plot out or look at our expected moves chart. And again, big areas right here. Let's call it six. Let's be conservative just because it is a weekend still. 64. Well, I'll call it 6,400 to the downside. 7,100 to the upside. That should catalyze some greater price action movements. And let's go see what those probabilities are looking like. Alrighty, let's see if this one's let's see if this chart is now going to act faster today. I think my computer was just being weird yesterday. It's probably my fault, not or maybe trading views as well. Anyways, looks like I already have 7,300 probability in there. That's on the weekly close, or going to be on the daily close. It's going to be pretty damn unlikely today. Or are we doing single side? Are we doing okay, let's actually do it like this. All right, so let's do 7,100 by the day's close. This is also going to be the weekly close as well, of course. Above target probability, actually 38.5%, pretty damn good. So Bitcoin bulls are going to take control. They do have their chance right now, and it is a legitimate chance. I mean, that's pretty fucking good. Below target probability, though, 61.5% about. By the same token, let's go look at what 6,400 would look like, even though it's technically a little bit higher than that. But I do think that it's appropriate to be more conservative in this region. And we see 25.25%. So, you know, relatively reasonable as well. I mean, at the end of the day, these are probabilities. So, you know, it's bound by maths. And while we've been living in this range for a little bit of time, it does become more and more likely to break. So, you know, looking at this right here, I do think that if bulls are going to take control, they kind of are like on a little bit of a ticking time bomb, meaning that if bulls are going to take control, it happens sooner rather than later. And if they want to take full control, we'll go back up to 7,800, 7,900-ish region on Bitcoin. Remember, though, that's still a big area. By the same token, to the downside, little bit more lackluster. So bulls have their chance, I think, in these next few days. And if they don't take it, well, then they're wrecked for forever. No, just kidding. I still do believe in Bitcoin long term, but you know, long term means 5 years, 10 years, 15 years, 20 years. That's too long. No one's waiting that long. No, it's all good. I understand that people, like, everyone thinks that Bitcoin is just going to go fucking moon or doom like today, tomorrow, the next day. It's probably not. It's probably going to be a little bit more range behavior. We're probably going to have a slow maturing asset over time. Anyways, I think that pretty much does it for what I wanted to say. This video actually significantly shorter than what I thought it was going to be. Funnily enough, is there anything that we're missing? We can go over to the 3-day and check out what it's doing. Let's see what this is looking like. Could also, the 3-day actually looks a little bit more on the bullish angled side as well. To be fair, it looks like we could very easily have a test up to 7,300. No questions asked about that. And where do we see the 200? Actually, right around 75. Makes it a little more difficult. 377 to the downside, getting our downside very, very well. And where is it at? Of course, 6,400. So I like how that lines up. The top side actually not lining up as well. The 55 coming in right around 7,900, which would be the upside target if we do really start to blast through the roof here. So fair enough. Looking at momentum oscillators, we do see, nah, it's not gonna be pressure. Actually, it's still kind of working its way. Let's see how the daily jewel's acting right now. So the daily jewel did give you a hot or long signal coming in on from the 31st of March. So that was right here at on a closing price of about 6,700, and we have gone up about 500, 600 bucks from that price point. So that's pretty damn good. But here's the thing: I don't think that signal is actually going to really play out, because we'd expect it to see on CMEs as well, and we don't. Now, it could line up for a damn good jewel buy signal, but it wouldn't happen at least for like another week or a week and a half, maybe 2 weeks. So it's I still think downside is more likely here, but I wouldn't be too fussed about a move back up to like 78, 79, wash out some very over leveraged shorts, get everyone really, really bullish again, and now you got buyers for the whole way down. But again, just a game of levels here, just like Avicii, and I do think that these levels more or less the same as yesterday as far as lower term timeframes go. Is there anything else that I want to check out? Let's go check out gold. I haven't looked at gold in a little bit, and I want to see the weekly close. I do think that the weekly close was more or less kind of strange here. Easy way to play this one, though. I do think that any sort of a move back above this high at 1644.5, and I will look for a continuation back up to $1,700 number. By the same token, the downside is a little more diabolical. I need to see just a tick below last week's low at 1572, 1573, and then yes, I could target a move all the way back down to like low 1500s, 1530ish region, and then play it by ear after that. But let's look at the daily. Daily looks okay. I think if anything's acting as a hedge right now in global financial turmoil, it's actually gold. And this is coming from someone who doesn't really care about gold. I think gold's kind of silly rock, but if have to call a spade, and this one actually looking like one of the better ones. To be fair, I'm sure people are calling this a hangman dildo. It's not. It's not at all. In fact, looking at the volume, looking at the shape, looking at the size, looking at the prior one, no, don't think so. So I would be angled to I actually would be angled to the upside still. The only thing that's really bearish to me on this one is the Jewel sell signal that we got, which was it was pretty damn good, but not like super perfect. It was pretty damn good though. But that already did, how greedy can we get when it gives you a signal right here at 1670, or if you front ran it like 1700 all the way down to 1450. I mean, that's a phenomenal move on gold. So is it relevant to think that it's already played out? Maybe. I don't know. Let's see how GBTC closed the week out. GBTC closed the week actually above the 200 exponential moving average, so not bad. GBTC perhaps even showing a little bit of upside threat as well. Daily 21 getting rejected though. So what do you make of that? Well, put a little more weight on this because it does have a lot more price action history for it doesn't have more price action history for the daily, but we have more data points, whereas the weekly does not. Yeah, as you can see, the 200 is actually barely even populated. So do I trust that much? No, I don't. To me, this looks like another rejection, and hidden bearish divergence almost confirmed here as well, just by taking out that 720, that 7.25 low right here, which I'll put an alert at. Let's see if that gets hit tomorrow when traditional markets open. What else do we want to look at? Euro dollar probably still bearish on. I still think it's going back to the prior low and beyond. Yeah, weekly looks absolutely atrocious. It might bounce up a little bit to like 110-ish region, but I'm overall bearish on this thing. I do think that longer term is going to come back down to 105, 105 and a half to 104 region. What else do we want to look at? Let's look at. Do we want to look at Japan really quick? Yeah, clear rejection of the 3.7s. I really don't like the way that Japan closed. What about Germany? Germany closing down 0.5% on the final day. Looks more like a rejection as well. Well below all major moving averages as they start to get very restfully downward tinted. Let's look at SPY as well. The ETF for the major index on traditional markets for America typically does lead, and we see the 377 actually still living above at 235. I do think that we are going to test it though. This is a clear rejection of the 200. We see the 21 to 55 crossing the downside right here. Don't like that. Do I think that there could be another washout to the upside, like a very nasty move all the way up to like 290, $300? It's possible, but I don't think that there's any real threat of upside move as long as we're below, let's call it 265. It's been tested and rejected too many times now, I think. So I do think that we're going to go back and test some downside as well. And very similar analysis to this one as we do see on Bitcoin, except instead of a daily, we see a weekly. We've never seen a major macro low on traditional markets be put in without weekly bullish divergence. And do we have any bullish divergence as it is right now? No, we do not. So I do think that it's probably going to come back down, make a slightly lower low, and then we might actually have a major low on this one. Could it go into recession, or I guess it's already recession, but could it go into like a serious depression long term? I guess it's possible. I didn't really think so before, but the more and more that we find out about this coronavirus, the more and more it looks like the problem with the coronavirus is that, at first we're being told it's maybe a couple weeks. Oh, it's just a couple weeks. You're on lockdown. Maybe now it's a couple months actually. Maybe now just until end of April. Now I'm hearing like some countries that are trustworthy say don't expect this to go away until 2021. So it feels like we're being baby stepped into being comfortable with the new normal. Now I don't want to start a nuclear discussion here, but it's obviously someone knows a lot more than the general average person, especially myself, with regards to this. I'm no fucking expert in this region, but it does feel like we're being prepared. The people are being prepared, because you don't want to, you can't just tell the population, hey, we're starting this virus thing and you're going to be on lockdown for the next year. Well, that sets a very bad precedent for the years to come, because this virus will very likely pass, but there will be ones in the future. We had like two major ones in 2008, right? SARS and I don't know, was it swine flu too? Then we had like H1N1 or something in early teens, and now we got coronavirus. So very, 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 very strange stuff. If this is the way that we're going to handle all viruses in the future, I mean, this is. It's like, what's worse? I don't know, man. Anyways, not a question for me to answer, just a question for me to posit. And I am really interested in hearing people's opinion on that, because Well, because I mean, it's just fucking relevant right now. Although I don't want to hear it in the fucking TA channel. Hey, if you want to talk trading and technical analysis, do it in the trading and technical analysis channel. If you want to talk bullshit, do it in the fucking tinfoil hat channel. By the way, for all the people in the TA program, you'll notice there's a new channel there. That's the prioritized channel for TA and trading. That's one that I'm going to prioritize my time in. I do not give a fuck about the other discussions going on about conspiracy theories and shit like that. It's not relevant and it's more of a distraction. Kind of fun to talk about, but when business needs to be done, need to have a nice clear delineated area where I will prioritize my time. Anyways, I do think that traditional markets probably do come back down here. If we take out last week's low, I strongly believe we're going to see 235 again, and I may be a small bounce there, but I don't think it'll hold long term. Back on a Bitcoin, let's go back down to lower term timeframes. We are now 44 minutes into this video, and what do we see? Well, we see the same thing as before. Same ranges, same everything. And going from blue box to blue box, I would say that all the prior things that we spoke about still hold. So with that said, I'm going to be signing off now. I'll be signing on Twitch a little bit later. I'm really looking forward to that. Probably another long-term session today, as it's just too much fun. And who knows, we might actually get some price action. Until then, I'll just be looking for a range to be established. Same thing as yesterday, 6,650, 7,000, if you want to call it that. As long as we're closing 4 hour deltas within the bounds of these blue boxes, I do not see any major breakout or breakdown. Downside, though, a little bit more attractive, I do think, especially below about 6,400 more conservatively, 6,500 more aggressively, to the upside, 7,000 conservatively, 7,100 more aggressively, and then should have some nice edges for some good trades. Anyways, this is not financial advice. I'm not a financial advisor. This message will self-destruct in about 5 seconds after posting this video. In fact, it's already self-destructed, so it's not even relevant anymore. Just kidding. Anyways, I'll be back on a little bit later. Take care, and until next time.